Jeff, Zach, thanks for joining me.
Hey,
Thanks, Steve.
Steve.
Thanks for having me.
Good to have you guys. We're talking a little bit about the REIT market here, which sometimes moves ahead of commercial real estate pricing, and it is recovering from its lows. Right now, let me see. A broad index of U.S. real estate investment trusts bought on the eve of the pandemic in February 2020 and held until now are up about 16%, dividend included. So they're actually up from those lows. We're seeing REITs reacting to what seems to be more tame inflation, some signals from the Fed of potential cutting and potentially a more benign interest rate environment and expectations for that. But your thoughts that we may have that the publicly traded market may be signaling that the bottom is behind us in pricing and the commercial real estate market, guys.
Yeah, I mean, I think it's positive, right? It helps with a lot of what we do. So, has people more interested, probably returning back in the market. But I think in reality, everybody was waiting for that bloodbath to occur, and I don't think it ever really hit like everybody thought it was going to hit.
Well, yeah, and you look at 16% up. That doesn't tell the whole picture, right? Because that's on average over
Right.
4 years. It was down for a while, and that means it's come
Yeah.
roaring back to get that average back above into net positive territory. Um, and when you see that kind of cross of that threshold to such a negative environment and then a positive one that exceeds the negative one, I would say that yeah, you're probably in a growth market as opposed to a declining market. And I think that you have a lot more tailwinds than you would headwinds at this point, despite kind of reports to the contrary. Fed cuts, interest rates coming down, pricing is kind of stabilized and normalized. People are not jamming 20, 30, 40% increases across the board. The crazy expenses related to real estate for insurance and otherwise have kind of stabilized at this point. So I think that you're right. I think the bottom would be behind us at this point, and real estate would be a good place maybe to get some money parked, especially because there could be recession or economic headwinds outside of real estate. So it could
Yeah.
be a good safe haven for a real asset.
Yeah, and I'll just comment. I mean, we're definitely commenting on this story, but in a way, I kind of hate these stories too because it just puts all of real estate into one bucket, and I think it kind of gives a false impression, right? Because when we look, we don't invest in all of real estate. We look at regions, we look at classes, and then there's definitely different behavior in regions and classes. I mean, to me, I think some of this is just the simplicity of a nice journalistic story of just throwing it all in one bag and calling it one thing. I think all of it, it's also a little bit of a hangover from '08 where things really did get super synchronized and
Yeah.
everything was kind of going which is highly unusual. So I would say, yeah, it does look like maybe we've kind of put in a quote unquote bottom for a quote unquote commercial real estate or real estate. But keep in mind, a lot of different markets, a lot of different classes, a lot of different properties. You can find a great property in a bad market. You can find a horrible investment in a great market. So I would just say, with these stories, it's always good to, it's good to cover it, but it's good to dig in a little deeper too.
Yeah.
Okay, thanks, guys. Thanks for the insights. If you enjoyed it, give us a thumbs up. Click subscribe if you have not. Visit our website, selectfincap.com, and get on the list to take a look at exclusive commercial real estate investment opportunities. Thanks a lot, guys.
Thank you,
Thanks,
Steve.
Steve.